Hello, good people, and welcome to yet again another session with the Dual Market Academy. As always, this is the home where we let you know what most players in this industry will not tell you about. In our today's discussion, we are going to talk about risk management. Risk management is one of the most important aspects about Forex trading. This is all about managing the unexpected just in case the price movement goes against your prediction. As we have said before, it's not always you'll be able to predict the correct movement of the price, because if that was possible, then nobody will be making losses. But those unlikely events where the price moves against your direction, that's the time you need to be prepared, and so you need to manage your risk. So what are some of the things you need to look at in order for you to be at comfortable areas or comfortable zones when it comes to your account levels and being at a profitable position with your forex trading? So the first thing you need to do is to predefine your risk per every trade you take. You will find most people always look at how much money can I make, or how much money will I be able to make if I take this position. That is okay, which is mostly the mindset of most people who are not who don't make profits in forex trade. But if you need to be a professional who will be making, most positive predictions, you need to first predefine your risk. So if I'm taking position X, let me have the amount of capital I'm willing to lose for that trade first before I even consider how much money I need to make. So in this case, you need to have a level of risk which you can take. And it's highly advisable that you take about up to 1% risk per every position you take, and up to about 5% of the total active positions you have. So what are we saying? If you take maybe 2 or 3 positions, let each position have up to about 1% as risk, and cumulatively let them not have more than 5% as the risk you have taken. Losing 5% or losing 1% is not the same as risking the entire account. And most people who have blown their accounts, they come up with a strategy whereby they don't define or predefine their risk. It's easier for you to recover 5% of your account than recovering 50 or 100% of your account. So take a risk which is manageable, about 1% per position, or you could take 2 or 3% per position, but let the total risk you have taken for the entire account not be more than 5%. We are saying this because not always you will always be correct. The times when you are not correct, let the risk not, damage your account. Let the risk you have taken be minimal. Let the risk you have taken be at a level whereby it will be easy for you to recover. Most people who are unable to recover their accounts, or most people who blow their accounts, they don't predefine their risk, and they don't define up to what point am I willing to accommodate a certain level of risk. Your risk appetite is not defined. And again, for you to be able to take up, risk levels of up to 5% or thereabout, you need to minimize the use of leverage. Remember, we have said leverage before. It is the amount of loan you take from the broker. This loan, most people think, it's their time for them to make money, and they can take even up to 500, 300% leverage. But for people who have been in this game for long and they have maintained a profitable journey, they utilize risk, or they utilize leverage of up to 10%. You can utilize 9, 8, less than 5 or so, but remember, the higher risk level or the higher leverage you take, it magnifies the profits, yes, but also think about how you are magnifying your losses. But what most people tend to think is, if I take higher leverage, if I take, positions with higher lot sizes, then I'm increasing my profit levels. But you forget, as much as you're increasing your profit levels, you're also increasing your risk levels, your loss levels. So it's important that as you minimize the leverage use, or as you make use of leverage, also consider the amount of risk you are able to accommodate. So don't increase the leverage you're using just thinking about the profits, but also think about the losses. That's why we have talked about the point number 2 here. As you take that leverage, consider how much risk am I able to accommodate. Will I be within the manageable levels, the 5%, or maybe some might go even up to 10%. But for you to recover a 10% loss is much difficult than recovering a 5% loss. The same will apply if you blow your account 100%, or your capital is gone. For you to get back into the game, you need to look for more money. So think about the leverage. It's good, but minimize use of that leverage in order for you to be in the game in the long run. You can be able to minimize your use of leverage. You can only be able to take risks of up to 5% only if you have realistic expectations. On a monthly basis, you could be looking at a gain of 3 to 5% of your entire account. But if you come in and say, I want to multiply or double my account, I want to make 60, 70% every week or every month, then that's the time you increase your use of leverage, and that's the time you increase your risk appetite. You're taking risks of more than 5, 10, 20%. So if you have realistic expectation, which I'm saying, anything between 3 to 5%, and that's something easy you can make if you have the discipline to put into consideration the 4 points you have talked about. First, predefine your risk. Don't take risks of more than 5% for the entire positions you have taken. Point number 3, minimize use of leverage. And you can only do that if you have realistic expectations about the gains you can make from Forex trading. These are marathon, not a sprint. You can make 20, 30% in a day or in a week, but will you be in the game in the long run? That's what you need to factor in. You need to be in the game in the long run. So minimize or have a risk appetite which is within manageable levels. That brings us to the end of our discussion today, and I believe you now know what factors you need to consider for you to be able to manage your risk properly. And the most important, please don't come in and think I will make my kill today and tomorrow I will be out of game. No. Unless you are a gambler, that's the only time you'll have such kind of a thinking. But if you want to be in the game in the long run, please have a way of managing your risk. You can engage us on the number on your screen for more discussions about risk management, which is a broader, discussion or a broader area when it comes to Forex trading. But if you put into consideration the points you've discussed about, you will be having a comfortable trading journey. Kindly leave us a comment, subscribe, and hit the notification button so that you'll be notified once we release our next video. Thank you, and bye-bye for now.